And we are live. Hello, everyone. Welcome to a new episode of Blockchain Talks. I'm your host, Dimitri, and this is Blockchain Talk. Sorry, bad introduction today. My apologies. So today we are going to talk about the current state of the market and a few tickers, updates on what is happening, some few important events. Now, without further ado, let's begin. Still working with my left hand, not wearing my bandage at the moment because it got all too sweaty and warm to carry it, but right hand is still broken. Anyway, let's take a little look at the current state of the market. I'm going to refresh once again. I'm at CoinGecko. Market seemingly back into the red. However, on the 7-day average, you might see there is some recovery going on. Let's zoom in on Bitcoin. There we go. So there was a little crash here at around the 21K zone, fell back towards 20K, but the upper reaches is now back on the recovery since early this morning. And we are currently at, a cap of 21,000. So once again, above the 21K zone. It is fluctuating around it. Seems to have become slightly stable once again. Let's zoom out a little bit. As you can tell, came from a lower low, 19K, went back up, quite some fluctuations here. Now seems to be stabilizing, which you will see if I start zooming out even more. 14-day range. So this was the tremendous hit we received, and now finally stabilizing once again. 30 days, as you can tell, some sideways trading. This was the crash as being done through Celsius, combination of Celsius, the Terra LUNA dump from a month earlier, the Binance disabling the withdrawal of Bitcoin from their platforms, etc., etc. So some bad news. As you can tell, we are back on a recovery, and there seems to be some small bullish sentiment, though I might say we will continue trading sideways for the time being. It is a healthy consolidation, a healthy correction which occurred in the market. And actually, I can zoom out towards 90 days, as you can tell. Not all too good, very bearish market, but there's a tendency to go sideways and perhaps small bullish sentiment. As you can tell here, once again a crash, but sideways trading. I believe we'll be entering a crap market currently for the forthcoming weeks if things don't get any better. The current market updates, I dare say, are a little bit of a mixed bag. There's some good news, there's some equally bad news. We will have to see how things play out. I do not have a crystal ball in which I can predict the future, nor am I going to rely, like so many other people in the crypto world, on technical analysis, on variety of charts and models. I prefer to see how trends evolve, and for what I can tell, as you guys can see here on screen, I believe we are going to enter a crabbish market with a little bit of volatility here, some higher highs, some lower lows. So all depends on how the market will evolve. With that said, let's get straight into the market updates. First one is some bad news. CoinFlex follows Celsius in suspending withdrawal. CoinFlex is also some kind of exchange, similar to Celsius, I'm going to say, and just like many other decentralized exchanges, many projects in DeFi, they are having problems with liquidity. They have problems with cash flow. And as a result, certain unpopular decisions need to be made, like suspending withdrawals. Now, for this, you might say, okay, all decentralized exchanges have it. What makes CoinFlex stand out? Well, sadly enough, there is some over leveraging going on. There's a little tweet I received through the group Crypto België, of which I'm a member and moderator. And so thank you for the guy who sent me this and brought it to my attention. Seems Coinflex made a few F-ups. I'm going to keep it nicely here. Well, you can see it on screen. RVUSD is a token issued by Liquidity Technologies Ltd. Coinflex related to an outstanding debt owed by a certain high net worth individual, the individual to Coinflex. So he borrowed for several millions of USD dollars and isn't really in the, well, power to pay it back. So there are some issues here which involve, well, a lack of liquidity due to the loan being made. As mentioned before, of course, this is a little reaction to something Lord Davies posted. Mentioned it a few times on my Twitter and email live streams already. Current market conditions is where various DeFi and financial blockchain projects have to prove their mettle. The current conditions, all decks are in trouble, only the good remains, and with that, I mean, look future-wise, those who survive this bear market have proven their merit future-wise. A lot of decentralized exchanges and a lot of DeFi projects are in trouble due to lack of liquidity, and during the bull run from last year when everything was all fine and dandy, promised high APYs. However, it's a bear market. They can't keep it up. They get into liquidity trouble. That's basically what I'm saying here, and that's basically what this is, what this Celsius and Terra LUNA had. Now, with Terra LUNA, that was much worse. There were a variety of other factors at play as well. With Terra LUNA, like I said, they dumped all their holdings and, well, got wrecked big time by themselves. Celsius, on the other hand, has troubles as a decentralized exchange due to current market conditions, as far as we know. And naturally, there's this additional piece of information which provides the information that, well, it isn't only due to current market conditions, it's also bad management within said team. Down here. Next up. Continuing on Celsius, Goldman Sachs aims to raise $2 billion to buy Celsius crypto assets at discount, reports. As you guys know, from the previous episode, I talked about Celsius being in bad papers, whereby they had to withdraw the ability to withdraw Bitcoin from their platform due to liquidity issues. In the meantime, have Celsius contacted a team of lawyers. There are reports of bankruptcy, etc., etc. Now, Goldman Sachs aims to raise enough funds in order to buy up all Celsius's crypto assets. Is this bullish news? Is this bad news? It's a bit in the middle. Doom thinkers will say this is bad news. Celsius has become illiquid. It will go down and will drag the market down with it. They will also say, look, Goldman Sachs is aiming to buy Celsius up, meaning they will stick around. The market wouldn't be as impacted. However, I'm following that last part, but I do want to note that it isn't really a healthy move for the crypto market at overall. Meaning, if Celsius gets bought over by Goldman Sachs, it implies a further continuation of being in a centralized governance, setup. And in order to become or to be a successful blockchain-based project, you need to be as decentralized as possible, to have your very own coins and tokens be as distributed as possible. So in the long term, might I say, this can be a good move. It will maintain a stable market, but it will make it more centralized, as Goldman Sachs is becoming more of a whale into the cryptocurrency market than it should be. And like I said, cryptocurrency market needs to be as decentralized and as distributed as possible in order to remain healthy. So it's a little bit of a mixed bag here. It's good news for the Celsius network that they can be saved, so to say. But for the cryptocurrency market, it's a mixed bag. It's okay because it entails some stability, but at the same time, it makes it more centralized, which isn't all too good. Further bad news from Coindesk: Solana's biggest DeFi lender almost got wrecked, then Binance stepped in. So as you guys know from the previous episode, SolAnt, DeFi exchange, also had trouble with liquidity on their own platform. This is a reoccurring theme in this episode and last episode. Once again, proving my point, the majority of DeFi projects are in trouble concerning liquidity. However, this is some good news by reason SolAnt, the DeFi platform, being mentioned here somewhere. I saw it. Yeah. So SolAnt, that's the DeFi exchange for Solana, came into trouble, as mentioned in previous episode, whereby they wanted to take over a whale wallet and prevent it from selling, well, its stablecoins and its holdings on Solana, as that would otherwise cause disruption on the network and Solana, well, going down the drain. Luckily, a second governance vote that was proposed prevented them from interfering. Things turned out quite nicely, and this little article says, look, Binance stepped in and actually helped out Solana itself, which in itself is good news. However, yeah, once again, back to a little mixed bag, meaning Binance gaining in some power over Solana and SolAnt itself being indebted towards Binance. So this needs more closer attention as to what is happening and what will happen. Some good news: Bitcoin sitting on exchanges drops to a 3-year low. Bull corners are on the right, charting new all-time high. So this is actually some bullish news. It implies that the reserves are being bought up. You can tell here, this little uptick here, where the reserves being dumped by Terra LUNA, this gave this little uptick. But as you can tell, there has been a major buy up, and it seems to have gone down. I'm going to zoom in, see if it works. From Glassnode, here we go. So up here, that's the Terra LUNA dump, additional dumping, so cascading effect. There has been a huge buy up, and we're currently here somewhere, meaning that there's a lot of Bitcoin flowing out of the exchanges. Means people are buying the dip, which is actually good news. There's also a whole lot more Volco owners, meaning people owning one Bitcoin. Bullish news in itself, and is probably the reason why we are seeing some stabilization here if you zoom out after the crash. Things are getting back to normal levels. However, a lot of money has been pulled out of the market, which is the reason why we are trading at lower prices. Now, that's an entirely other mechanic I can explain, but not going to do so during this live stream. If you guys have questions, you can ask them in the comments down below, and I will gladly offer you an insight into the mechanics, or you join up my Telegram channel, or you buy one of my courses. In there, it is also explained quite thoroughly. Yeah, that's that. Bear market between normal range. There we go. Next up article: Anonymous vow to expose non-quant suspicious actions from the Terra collapse. So Terra LUNA, well, we are all reeling in on the pain that they caused, and actually the hackers community called Anonymous is interfering and want to expose the quant suspicious activity. A tip of the iceberg has already been lifted during my live streams, whereby I mentioned a variety of weird movements before the crash. I'm pretty sure they will dig up even more dirt as to what he was doing and as to what occurred. Probably going to be pushed down on the side because, well, despite Anonymous, in my opinion, becoming slightly too mainstream and to mention it in proper English terms, naturally, well, becoming too mainstream. I'm going to keep it at that. They do still have some controversy to their name, and from time to time they do actually some interesting things. So I'm keeping a not so very close eye on it, but I'm keeping it in mind and seeing what is brought forth. It can always be interesting to see the dynamics as to why a project crashes and why certain decisions are made. From that, we can learn future-wise about other cryptocurrency projects, what can influence the market, and shield ourselves better to it. This is an article from Bancor, sponsored content on CoinDesk. I've actually added this little article, not going to read it a lot because it is quite lengthy and at times a little bit technical. However, it boils down to the very same things that I've mentioned here. Mainly that it's now a time for decentralized services, for DeFi projects and decentralized exchanges to prove themselves, to show they have merit. These are very trying times, and that's actually what this article is explaining. DeFi isn't dead, it's evolving towards sustainable on-chain liquidity. So they are underlining that liquidity is one of the major aspects of successful DeFi project. And I'm actually not surprised to see Bancor pushing out this sponsored content. By reason, Bancor, in one of my other live streams called Crypto, I did an analysis on it, and they were the real trendsetters concerning everything DeFi. And I was very pleasantly surprised about these guys, and they have shown their merit on numerous times. Sure, like any other DeFi protocols that exist and DeFi exchanges, will they be having trouble with the current bear market? However, they are one of the few that hasn't reached my ears about having liquidity problems. Sure, they will be seeing lesser activity, and I'm not very sure how well they are performing currently. Well, I can actually look it up. But from what I can tell, they are still doing fine. They are one of the oldest DeFis that exist, and I can tell, yeah, they're following market sentiment, it seems. Yeah. So, yeah, following market sentiments, but still around, and I see no trouble occurring with these guys. Where was I? Yeah. So what's the article talking about? Towards sustainable on-chain liquidity, that it's now a trying time for the beginning DeFi projects in order to solve their issues and either go down and start anew or to fix their issues in short notice or for the next bear market and bull run. That's basically what this article is saying. It's well written. I suggest you look it up. Goldman cuts Coinbase to sell due to falling crypto prices and industry activity. Shares drop. Now, this is one of the head teams I mentioned in the title, and it all comes down to Coinbase. Now, people who have bought my course, Ultimate Guide to Cryptocurrency, will know that I refer to Coinbase as a very easy setup to get involved with cryptocurrency. I still stick to that statement. However, as soon as you get more experience after, well, let's say a few months, it is best to withdraw your coins and put them in a safe wallet. By reason, Coinbase allows you to buy and sell cryptocurrency quite easily. However, in the last couple of months or even year, things are becoming slightly shady. They become quite money thirsty, so to speak. They launch their own stock. They are launching their own coins, and naturally, they are very heavily complying with local regulations. So KYC, implementing, well, doing away with the anonymity that entails cryptocurrency. That's one of the reasons why I'm slowly backing away from these guys. Well, I actually closed my account with them. By reason, there exists other exchanges which I trust much, much more, like Kraken, Bitvavu, etc. Now, why is this important? Cuts Coinbase to sell due to falling crypto prices and industry activity. Shares drop. With this, I want to highlight a very important dynamic with exchanges who have their very own stock and valuation on Wall Street. Many crypto exchanges their value is tied to the current state of the crypto market. Last year, during the bull run, Coinbase was going all up. They were important, they were big, were addressing multiple billions of dollars, processing it in crypto. However, during the bear market and the obvious dump that occurred due to Terra LUNA, well, the cryptocurrency market took a nosedive from its all-time high, whereby there was a market cap of $2 trillion. It went down towards slightly above 2 trillion or slightly above 1 trillion or slightly underneath 1 trillion. So we are talking about multiple dollars being evaporated. Coinbase was one or is still one of the bigger centralized exchanges to buy cryptocurrency. For literal billions of dollars of cryptocurrency being moved on that platform. Now, due to current market conditions, I do not need to highlight the current state of it. As you can tell, red, and if you zoom in on Bitcoin, to take on the monthly or even 90 days, it's even worse, you can see we went down tremendously, meaning as centralized exchanges, their stock value is attached to the value of the cryptocurrency market, is taking a nosedive as well. In case of Bitcoin, if the majority of their holdings is in Bitcoin, about since the last all-time high, 70%. So it shouldn't come as a surprise we see something like this occurring. They are in a free fall, in a drop. And naturally, this once again becomes a little mixed bag of good and bad news. It means there's time for recovery. There's time to pick up on a low price some Coinbase stocks in order to get some more appreciation. At the same time, it's bad news by reason this once again creates a little bit of fear, uncertainty, and doubt about the cryptocurrency market. So once again, a little bit of a mixed bag of emotions. However, do keep this in mind, especially the mechanic as explained, that the stocks of a centralized exchange dealing in cryptocurrency is inherently linked towards the value and the performance of the cryptocurrency market in its entirety. Now is a good time to buy some coin, so the $ coin or Coinbase stocks, because it's low, but it will go back up as soon as we are in the next Bitcoin cycle, meaning after the next halving, it will go back up as the market will see once again a new influx of fresh, new money, which will appreciate the cryptocurrency markets in its totality, which will see Coinbase appreciating once again. However, despite that information, it doesn't take away my issues of trust I have with Coinbase. So the aforementioned aspect of the KYC and compliance to local regulations being fully automated, etc. So yeah, I still stick to my statement. It's a good platform to start buying cryptocurrency, but after a few months of testing the waters and learning everything new, it is best to move your coins away from the platform and keep them in self-custody. That's all I'm going to say, or move them towards another exchange, but naturally the best part is to keep it in a separate wallet. Once again, a little rehearsal from my Twitter, whereby I'm mentioning the same thing, this bad news, so attached to this article. It implies Coinbase is losing trust as a major exchange. True. Their value is dependent on the health of their BTC crypto holdings. As mentioned, this shows Coinbase getting into bad papers. Best to immediately withdraw your coins and move to another exchange. Now, not financial advice, naturally, but this news, and that's why I said it's a mixed bag and probably more on the negative side. The reason they went full stock Wall Street and their shares are now being pushed towards a sell level implies that Coinbase on the long term might say, look, we're not performing all too well. We need to sell off part of our assets in order to pay our folks, etc., and that they actually can start to lose their market cap, which is bad news. And well, that they might be getting into bad papers is bad news overall. I do not need you guys. I do not need to draw schematics here on how things can roll out. If you used your brains for a little while, you can see where I'm going at here. So do watch out. Other news, community reacts after SEC Gensler affirms BTC's commodity status. Actually comes down to, or was it? Yeah, a video statement. Naturally, they quoted a few guys. It's whereby that the head of the SEC said, look, the only cryptocurrency which has commodity status is going to be Bitcoin. The natural reaction of many is, how so only Bitcoin? What about Ethereum and many other coins? And the answer to that is, quite frankly, BTC only has the commodity status due to being fully decentralized, distributed, and having no central team behind it. Naturally, in the video itself, and if you can read between the lines, they are still open to a variety of other projects that they might call and give a commodity status. But they need to be like Bitcoin in nature. And one of the other projects that I know on the top of my head is going to be Ravencoin, which will probably also be labeled with a commodity status. By reason there is no centralized foundation, developers took their hands off. There is no centralized foundation like you have with Ethereum, Tron, Binance, etc., meaning they cannot be considered as security, hence, moreover, as a commodity. Now, in previous tweets of mine in the past, from last year even, I already predicted this move, more or less, by stating that Ethereum, see if I can type it here. Otherwise, hold on. Ethereum and security. Well, sustainable, yada yada yada. In September somewhere. With this, oh yeah, here it is. Reaction towards a little debate I had with a few guys. Ethereum currently is exempt of SEC status, which means they know, but would not get into it yet. Reason government and finance have a stake with it, but poor real stick is behind the door. So I already mentioned it as a response towards, well, a reaction, is Ethereum going to be considered a security, yes or no? Whereby an official mail dating from November 22nd mentioned, look guys, it's not registered with the SEC. And that they say, look, we leave it in the middle. It's basically what this is saying. And a lot of the Ethereum maximalists were like, oh no, it's not going to be considered security like Bitcoin, etc. Well, case in point, where was it? Now they mentioned only BTC has commodity status and leaving Ethereum on the side. So meaning they are stating, well, we might consider it as a commodity, but it has all the aspects of being a security. So with that said, do keep that in mind. Here's a little rundown of GC Keen, also Raven coin guy like myself. And he lists up what you need to be in order to be considered commodity. Commodity doesn't have an issuer. Ethereum had a pre-mine and a pre-sell in its early days. So there was an issuer back in the day, was a pre-mine. So that's the first stick that they might be considered as security. It doesn't have one party behind it. The founders of Ethereum are well known. There's still a foundation behind it, still one centralized foundation. Vitalik Buterin currently still being the head guy for Ethereum, so that checks out. There may be a small number of commodity tokens. With that, he refers to, well, checking one of these two. Said BTC is commodity token, not security. Raven is likely one of a few other cryptos that won't be classified as security. Now, with this talk, he leaves open that he might consider Ethereum as a commodity, but in all likelihood, like I mentioned in past tweets, probably a stick they are holding behind the door. Here's the episode. You guys can look it up. Some further news. Some good news. Central African Republic president launches crypto initiative following Bitcoin adoption, meaning the Central African Republic earlier this year did a little El Salvador. They made Bitcoin legal tender in their country and are now trying to create a legal crypto hub, a little crypto island, same way as El Salvador is doing. Not going to get deeper into it. I know that the project is in the working, and it was called sungo.org. So this is going to be their little crypto project island. It's going to be a crypto hub for trading, etc. Come on. Initiative. By the president's objectives. Business and attracts global crypto enthusiasts. So they're very on exchange and places where you can buy, trade, and do whatever with cryptocurrency. So that's some finally good bullish news. With that, I'm going to end this episode on a more happier note. Faces are slow. Sorry, guys. With that, thank you guys for watching. If you learned something new, please like, subscribe. If you like this video, down below in the comments you can find a few articles and links of mine if you want to help support the channel. With that, I say goodbye, and up until tomorrow, whereby we'll be doing an episode of Crypto Bull. Coin isn't known yet, but if you guys send me a few DMs with a coin to analyze, I will gladly make an episode about it. With that, thank you guys for watching, and until next time, bye.